Hello, welcome. This is Business Now, reaching you live from iBrandTV News Studios here in Lagos. Coming up in a moment, federal government grants 3-year tax relief to 33 companies. Experts predict Nigeria's debt will hit 50 trillion naira within the shortest possible time. And Ghana loses over 50 Ghana cedis annually in royalties from quarry. And US stops Russia's bond payment of $600 million in bid to raise pressure in Moscow. Glad to have you join us and hear our business stories making headlines at this hour. I am Frank Komalape. Now, the federal government has approved the application of 33 companies seeking pioneer status under the Industrial Development Income Tax Act in 2021. This was contained in the quarterly PSI report released by the Nigeria Investment Promotion Commission. The report also reveals that the investment made by 33 companies during the year amounted to 543.88 billion naira. It also noted that the government declined the applications submitted by 10 investing firms, including the popular fintech Flutterwave, during the review period. The report also revealed that the 33 firms were benefiting from the tax incentive scheme in fourth quarter, while the request of 132 companies were still pending. And away from there now, an expert has attributed the decline in capital inflow into the country in 2021 to exchange rate volatility. Finance and economic analyst Mukhtar Mohammed stated this earlier in the day on iBrandTV's flagship morning show, Business Breakfast.
I think the major cause of this decline has to do with the exchange rate volatility, especially the difference between the parallel market and the government-owned control market, or the private sector official market, the import-export market. I think the difference is very wide. And again, we've not been able to create a two-way repatriation of fund system, because if you watch a lot of companies that are doing business in Nigeria that want to repatriate their money back to the country in dollars have not been able to repatriate, especially the aviation sector. So it's a challenge that has been on for a while. I'm not surprised about the numbers that came in. I remember that before now we are attracting mostly foreign portfolio investors, and that number has shrunk because of, like I said, the two-way exchange system that has to do with the stock exchange. It's not that the fundamentals of these companies that are listed in the exchange have been anything less, rather they've been better. But the two-way exchange system has not been good, especially for foreign portfolio investors. And if you don't have foreign portfolio investors, you are not looking forward to have foreign direct investors. So if you, by your figure you read out, you see that the financial sector attracts more of this funding, but most of them that came in from the financial sector has to do with maybe credit facility to some of these banks, also has to do with foreign portfolio investors.
And now the Center for the Promotion of Private Enterprise, CPPE, has warned that worsening insecurity in the country may aggravate Nigeria's capacity to attract and retain new investment as investors evaluate their risk. According to the CPP, the state of insecurity has reached a frightening level, deserving of a state of emergency declaration, adding that the trajectory portends serious adverse implications for economic growth prospects and investment outcomes. In its 2022 first quarter economic review, the Chief Executive Officer of the CPP, Dr. Muda Yusuf, noted that the worsening security situation in the country, the escalating energy cost, exchange rate depreciation, liquidity crisis in the foreign exchange market, and the spike in inflationary pressures form major headwinds, undermining economic growth. Dr. Yusuf argued that the policymakers should prioritize key development indicators such as citizens' welfare and investment productivity in the economy more than the GDP numbers. All right, let's bring our guest now, Mr. Dr. Moda Yusuf, joins us now. Thank you for joining us, Doctor. We appreciate your time.
Thank you very much, Frank.
Okay. I want us to look at, bring us with speed, up to speed now. So some of these issues you've raised in your analysis at the meeting yesterday, what more do we have to know, and how do we get past this stage and some of the challenges you place on the table?
Well, we need to appreciate the fact that if we don't fix the economy, the situation in our country will continue to get worse. Both the social aspects and even political aspects. So that is why we have highlighted the critical issues that the government needs to pay attention to as far as the economy is concerned. Because you need a solid economy to support the social fabric. You need a strong economy to even support the political structure that we have. So that is why we highlighted the key issues and the principal headwinds that we have identified as affecting businesses in the first quarter were first the growing insecurity. Because you have to be alive before you can do business. And without investment, you can't create jobs. Without jobs, you can, also create a vicious cycle of insecurity. So it is important that we deal with insecurity, to review our strategies, and the impact has been in two major dimensions. There's insecurity around terrorism, banditry, ethnic clashes, killings, arson, and all of that, especially in the northern part of the country. And that has practically paralyzed investments, particularly the major investments in agriculture, which that part of the country is noted for. And the way things are, how many investors can go and establish a business there? Particularly long-term investments. You can't do it because the risk of investment in those locations, particularly in the northwest, north central, northeast, the risk of investing in those locations are now very high. Then we have the security implication for our oil and gas sector. We have seen what has happened to our investors in oil and gas. Many of them have left the country, especially the oil majors. Some of them have abandoned their oil rigs on the land. A lot of them have moved to deep offshore because they are no longer safe. Their investments are not safe. Then you have this massive crude oil theft. All of these things are security issues. And if we don't fix them, we may be pushing the economy to the brink. So security is number one. Then the second major issue is the energy crisis. Many other countries have what we call energy security, or they aspire to have energy security. Many of them have reserves, just in case there are shocks or dislocations in the global energy market. But here we are, we know how the energy situation has been affecting our country. First, we have the problem of the Ukraine and Russia, which has affected the global energy market, which has pushed the cost of diesel to over 200%. And in a nation that doesn't have reliable power supply, how do you now want to power the economy with the cost of diesel now? So it has led to the escalation in the cost of production. It has aggravated the cost of operations. It has increased the cost of transportation because 90% of the trucks that are moving goods across the country are running on diesel. They are factoring all of these things into the cost of the products that they carry. And at the end of the day, it is the consumers that we expect will pay this because they have to factor this into cost. And where they cannot factor it, it is the investor that will bear the brunt. And that is happening now in several instances. Because investors cannot pass on the cost to consumers, they are taking the hit. Some
Doctor,
SMEs have
permit me
suspended
to.
production.
Yes, Doctor, could you permit me to come in here? Certainly, these are worrisome issues that you place on the table. No doubt there are implications to these. But how well do you think the Nigerian government is responding to some of these issues that you place on the table, knowing full well that there are implications, certainly?
Well, unfortunately, there isn't much on the horizon in terms of the quality of response to some of these things. The government has been doing quite a lot around insecurity. But the way to measure success is the outcomes. If the government has been doing a lot, they sack the service chiefs, they have been importing fighter jets and all of that. But the problem is still with us. So to the extent that the outcomes have not justified these interventions, then there's need to go back to the drawing board and see what we need to do differently. So that is why I was talking about the quality of intervention. Around the oil and gas sector, the government lately has mobilized the security forces to go and, curb the menace of these illegal refineries and crude oil theft. Yeah, better late than never. But we should have done that many years ago. It is mind-boggling the percentage of our crude that have been stolen. Now we cannot meet our crude oil quota. We cannot take advantage of the high crude oil price in the global energy market. If things were working well, we should be smiling by now. Our foreign reserves should have been more robust. Our currency should have been stronger. But what we are having is the reverse. We are importing billions of dollars of petroleum products. The economy is bleeding through all this subsidy problem, and so on and so forth. So the government is doing its best. We have the PIA that have been put in place. But again, the commitment to reform in the sector is very weak. Even the PIA now is almost being cannibalized.
Yeah.
Some part of it has been suspended.
Right.
So the commitment to reforms is very important as far as the oil and gas sector is concerned. And on the foreign exchange, look at what the exchange rate is now. We are talking of 590. It's affecting a whole lot of businesses. There's the problem of the depreciation. There's the problem of the scarcity of foreign exchange. And look at the implications for the economy. Again, for that, we need to reform the foreign exchange market. We cannot continue to have a foreign exchange market where you have a premium of close to 60% between the official window and the parallel market window. It can't work. So the earlier we adopt a market-driven, a flexible exchange rate system, the better for the economy. But unfortunately, the CBN has been very rigid for whatever reason. Sticking to 416 when we know that the realistic exchange rate is far, far, far beyond that. And people are doing all sorts of, deals because of this wide disparity, because of this multiple exchange rates, all manner of distortions in the economy, all manner of underhand, under the table dealings. These are consequences of wrong policies. So those are the things I think the government needs to do. They need to address issues of reform. They need to address issues of security. They also need to address issues of infrastructure so that we can reposition this economy. We can ensure a lot more confidence for investors to bring in their money.
And now, amidst current subsidy trajectory and the economic implications of the Russian invasion of Ukraine, the Center for Promotion of Private Enterprises, CPPE, also projected that Nigeria's subsidy cost may hit 4 trillion naira by the end of the year, depending on how long the sanctions and invasion last. The center noted that this has serious implications for the country's budget and government's finances. And now I'm joined by our Chief Executive Officer, CEO of the center, Dr. Muda Yusuf, joining me now. Thank you for your time. What do you mean by if the sanctions on Russia continue by the Westerners? So what do you mean? Maybe you need to break it down for us.
Now, the conflict, Russia-Ukraine conflict, has created a major disruption to the global energy market. I'm talking of petroleum products and also natural gas, and of course some commodities as well. Now, for as long as this crisis lasts, for so long are we likely to see high crude oil price. Already we have a lot of sanctions by the EU and the United States on Russia, and all of this will disrupt supply of petroleum products and gas. And now, the higher the crude oil price, the higher the subsidy payment. Because unfortunately, because we are not refining our products locally, our import bill will be going up on petroleum products. Our subsidy payment will also be going up on petroleum products. Before the Russian invasion of Ukraine, the NMPC had made a proposal that it was going to cost, subsidy was going to cost the government 3 trillion naira. On the back of that, the president even made presented a supplementary budget of 2.55 trillion. Now that we have this invasion and oil price has crossed the $100 per barrel mark, sometimes getting to 120 or 130, then that means that our budget for subsidy will increase. So if we are talking about 3 trillion before the Russian invasion, we should be talking about close to 4 trillion now. So the point I'm making is that this has very serious implications for the fiscal operations of government. Already in February, the NNPC was not able to remit anything to the Federation account on account of the fact that practically all its resources have been consumed by subsidy. This is already affecting some states. Some states are already saying that they have to go and borrow to pay salaries. This will also affect the level of fiscal deficit. The deficit in the budget before this crisis was about 6.3 trillion. Now with all this subsidy, supplementary budget and all of that, the fiscal deficit is likely to go up to 9 trillion or more. So that means borrowing will have to go up. So I'm saying, I'm linking all of this together for us to appreciate the macroeconomic implications of some of these things. And the more we borrow, the more we create incur higher debt service costs, the more we create even liquidity money supply problems, the more we cause the exchange rates to further depreciate. So the outlook as far as the macroeconomic environment is concerned is not looking bright because of all these challenges around subsidy, around deficit, around debt service.
Let me quickly
already
take you.
As of December 2021, debt service was already over 4 trillion.
Pardon me, doctor. Pardon me, doctor. Let me quickly take you on. By simple economics or calculations, once the price of crude oil goes up, it's supposed to add up. So the question for ordinary man in the street is that why is it that it's not adding up? Instead, it's taking more money from us in form of subsidy payment. How do you explain that?
All other oil-producing countries are smiling now. They are building their foreign reserves. Their currency is gaining more strength. But we are an oil-producing country, and yet we cannot refine our petroleum products domestically. That is where the problem is coming from. All our refineries have collapsed. So we are as vulnerable as the non-oil producing countries. That is why this whole Russian issue and energy prices is affecting us as badly as it is. Because we are not refining. So the little windfall we are getting from all our oil outputs, we are throwing it back to import petroleum products at very exorbitant rates. Because all these products have gone, the price of all these petroleum products have gone up globally. So that is why we are not benefiting at all. If anything, and just a paradox, the high oil price is penalizing the economy, it's penalizing the citizens. rather than it for it to be benefiting us, because we are all producing country. And we are perhaps the only oil producing country, or the only OPEC member that is in this kind of mess. We are an oil producing country, and yet we are importing massively at a very exorbitant rate. So it's the way we have managed our oil and gas sector. We have not managed it in a well enough to be able to take advantage of the current situation in the global energy market. So that is where the problem is coming from. On top of that, we have the oil theft. We can't even meet our OPEC quota. So some of the things that will have given us some leverage at this time, we are not also getting it in terms of oil production.
Okay.
We have vandalization, we have divestment from the upstream oil sector. So these are some of the problems.
Okay. Just quickly in 30 seconds, give us your outlook, and how do you think we can reduce this pressure on the foreign exchange market?
To reduce the pressure on foreign exchange, we need to revisit the foreign exchange policy. If you continue with this fixed exchange rate of 416, the foreign exchange problem will persist.
Okay.
Because the problem of foreign exchange is both a policy problem and a structural problem.
Okay.
You can't easily fix a structural problem because it has to do with the productivity of the economy to be able to generate foreign exchange.
Okay, we have to leave it there now.
Import substitution.
Yeah.
But you can fix your policy overnight.
All right, Doctor, we'll have to leave it there now. Thank you so much for your time on Business Now. Dr. Muda Yusuf is CEO the CPPE. Thank you for your time on Business Now. You're still watching Business Now, coming to you live from our studios here in Lagos, Nigeria. We'll take a moment now. After the break, more news coming your way. Stay with us.
Swift Dry Cleaners Limited, professional dry cleaners, best in dry cleaning and laundry services that meets the needs of our consumers. Yeah, Swift Dry Cleaners Limited, Swift Dry Cleaners Limited, Swift Dry Cleaners Limited, yeah. Swift Dry Cleaners Limited, yeah, for clean wash and quick delivery, yeah. Swift Dry Cleaners Limited, Swift Dry Cleaners Limited, Swift Dry Cleaners Limited, Swift Dry Cleaners Limited, for clean wash and quick delivery. Ooh.
Swift Dry Cleaners, clean wash, quick delivery.
If you just join us, this is Business Now, coming to you live from our studios. Let's turn our attention to African stories now. The European Commissioner for International Partnership, Ms. Jutta Upilani, and the Minister of Finance, Mr. Ken Ofori-Atta, officially launched the multi-annual indicative program for Ghana for 2021 to 27, March 31st, 2022. The ceremony took place during the Commissioner's visit to Ghana on 30 and 31st of March. A representative from the Minister of Agriculture, ambassadors of the EU member states and Switzerland, and the regional director of the EIB was also in attendance. This new programming falls under the EU's new Global Europe Finance Instrument and is expected to provide about 203 million euro for the period of 2021 to 2024 to support the following three priorities: green growth for jobs, smart and sustainable cities, good governance and security. Away from there now, the Minerals Income Investment Fund, MIIF, says Ghana loses over 50 million Ghana cedis annually in royalties from quarries due to the country's over-concentration on gold resources. A chief executive officer of the MIIF, Edward Nana Yakoranteng, who said this at the opening of the 2022 Ghana Mining Week and Gold Expo in Tekoradi, said quarries should be given Ghana around 100 million Ghana cedis royalties annually, but Ghana only realized just about 3.8 million Ghana cedis in 2022. Explaining the cause of the problem on the sidelines of the Ghana Mining Week, Nana identified problems with the quarries, including invasion by foreigners, underpricing, lack of capital, encroachment by settlers within the catchment of the quarries. And away from there now, South African markets opened the week on a high and traded in the green yesterday as investors digested the latest sovereign credit ratings outlook and the ongoing peace talks between Russia and Ukraine. Moody's Investors Services on Friday upgraded South Africa's credit rating to investment grade with a stable outlook as high commodity prices continue, supporting the government's effort to reduce the budget deficit. This saw South African stocks trading on a high yesterday, with the rand steadying around 14.6 rands to the US dollar, but struggling for momentum. The rand has shown reduced volatility this year in comparison to other emerging market currencies, and this is also likely reflective of a somewhat reduced credit risk market, precise a lower risk of default. And on the foreign scene now, oil prices are bullish during the Asian sections on Tuesday as two major oil benchmarks are up over 1%, fueled by the potential for more sanctions following alleged war crimes by Russian troops in Ukraine. This has also added to concern about supply disruptions while Iran's nuclear talks stalled. The global benchmark, the Brent crude futures, is up by 1.62%, currently trading around $109.27 a barrel. The United States benchmark, the West Texas Intermediate futures, also up by 1.62%, currently at $104.97 a barrel as of the time of filing this report. Also weighing in on the price of the black liquid is the comment of the Japanese Industry Minister Koichi Yaguida, who stated that the International Energy Agency, the IEA, was still working out details for planned second round of coordinated oil releases. Despite concerns about war crimes in Ukraine, Bitcoin managed to rebound significantly on Tuesday. The current price is about $46,700, which is the 100-hourly simple moving average at the time of the publication. Initial investors' interest was dampened after the Ukrainian government initiated a war crimes investigation after it reported that the bodies of 410 civilians were found around Kyiv. Some of the victims were discovered in mass graves, while others had been shot close range while their hands were tied. And now oil futures rose on Tuesday as the United States and Europe planned new sanctions to punish Moscow over alleged war crimes by Russian troops in Ukraine, raising concerns of tighter global supply. While Iran nuclear talks stalled, Brent crude futures rose by $1.87 or about 1.7% to $109.40 a barrel, while US West Texas Intermediate futures were up by $1.83 at $105.11 a barrel in early trade. Both contracts briefly jumped more than $2 a barrel in early Asian trade after Japanese Industry Minister Koichi Yaguida said the International Energy Agency was still working out details for a planned second round of coordinated oil releases. And now the United States stopped the Russian government on Monday from paying holders of its sovereign debt more than $600 million from reserves held at American banks in a movement to ratchet up pressure on Moscow and eat into its holdings of US dollars. Under sanctions put in place after Russia invaded Ukraine on February foreign currency reserve held by the Russian central bank at U.S. financial institution were frozen. But the Treasury Department had been allowing the Russian government to use those funds to make up coupon payment on dollar-denominated sovereign debt on a case-by-case basis. On Monday, as the largest of the payment came due, including a $552.4 million principal payment on a maturing bond, the U.S. government decided to cut off Moscow's access to the frozen funds, according to U.S. Treasury spokesperson. Well, you're still watching Business Now, coming to you live from our studios. We go on short break now. When we return, we'll bring you more news update. Please stay with us.
You, a business owner, looking for the right exposure to attract massive clients to your brand? The long search is definitely over. SME Hub allows you to showcase your products and services to a wide range of viewers and buyers nationwide. For further inquiries, please call Alero on 081-323-43262, or you can send an email to alero.ogudere@ibrandtv.com. Grow your brand and boost your business on SME Hub, live on iBrandTV, where business comes first.